A revenue-generating measure included in this week's federal budget is drawing criticism from Canadian entrepreneurs and investors. The government is increasing the rate of the capital gains tax from 50% to 67%. It estimates the increase will generate an additional $19 billion in revenue. Capital gains are the profits that businesses or individuals make from selling an asset like a stock or a second home. For a deeper look, we're joined now by Katrina Miller and Benjamin Bergen, and Katrina is the Executive Director for Canadians for Tax Fairness, and Benjamin is the President of the Council of Canadian Innovators. Thank you both for joining us. So, Benjamin, we'll start with you. This change was introduced as a way for the rich to, quote, pay their fair share. What do you make of the increase?
Yeah, so if you look at what is being proposed, really it's going to make it more difficult for individuals to invest in Canadian companies. And this isn't just for the tech sector, it's actually for all businesses here in Canada. And the numbers that the government has put out are a bit of a misnomer and a bit disingenuous, claiming that it's just going to impact a very small percentage of Canadians each year. They sort of make the number 0.13. But when you actually dive into the numbers, in a lifetime, of how that impacts Canadians, it's actually closer to 20%. So this just isn't, at tech companies or certain types of CEOs. It's people who own, maybe a barber shop or people who are an electrician or a plumber. So the consequences of what the government has put forward is far-reaching into the economy. And I think it really has to be understood by Canadians in order to assess whether or not this type of measure is actually creating fairness. Because ultimately, at the end of the day, I think this is a bit of a move by the government to try and shake Canadians off of their concerns about a stagnant economy, an economy that this government's been in charge of for 8 years, and that has struggled to create wealth and prosperity for Canadians.
Okay, well, we'll get back to how this could affect the middle class in a moment, but I do want to get, Katrina, your first thoughts on what you make of this increase.
Well, frankly, I think this increase is a long time coming. We have been for decades undertaxing income from investments in capital in terms of how that levels out to taxes that are applied to waged earnings. And frankly, all this does is take the income investments of the richest Canadians, those who are making on average $1.4 million in income annually, and tax them a little bit more to bring them a little bit more in line with what your average waged earner, your plumber, your electrician, your teacher has to pay.
Okay, so Benjamin, I just want to pick up on something that you said. You said that, that this is going to affect the middle class. Expand a little bit more on why you think that is.
Yeah, for sure. So I think just one thing that really needs to be made clear is that the number, 1.4 million makes it seem like that is the salary that individuals are making or the capital gains that individuals are making each year. That's actually just off of an occurrence. And I know this sounds technical, and I know we're kind of getting into the weeds on it, so we can go back to the high level, but it matters because I think the positioning of the government is trying to create a soaking of the rich approach to this. It's actually around each interaction for a year is that number. So if you've sold a business, like let's say you've worked 20 years and you decide to sell your barbershop business for $1.2 million or 1.4 or 1.6, and you've spent 20 years building it or 30 years building it or 40 years building it, it's that rate that's being taxed at a much higher percentage. So I think it just needs to be made clear who this is actually specifically targeting. It is a broad swath. Now, how this impacts the middle class is that increasingly what we're seeing in Canada is a productivity challenge. Deputy Governor of the Bank of Canada raised this about 6 weeks ago in a speech, saying there wasn't enough investment going into companies in order to create prosperity, in order to create productivity. And so this policy that the government is wanting to implement goes right at the heart of being able to invest in Canadian companies and Canadian firms. And so the government, is actually going against the advice of top economists, and really is not realizing that they're potentially putting at risk our future by not allowing Canadians to invest in the companies that will allow us to be a more productive society. and a society that is ultimately able to generate enough wealth and prosperity to pay for its social programs.
Katrina, do you think that this could lead to a brain drain, to Benjamin's point here, where businesses are leaving or starting up elsewhere because of this increase?
Absolutely not. I think, frankly, this is fear-mongering at its worst. In this tax measurement that they've put forward, they've in fact been very, very careful to ensure that innovators, that entrepreneurs and small businesses continue to receive the tax breaks they have been receiving, and in fact increased tax breaks. Sitting in this tax mechanism is an additional tax break for an entrepreneur who grows a company and then sells it. On the first $2 million of that sale, they get an additional tax break as part of this package that's going forward. So we're seeing the government be actually very careful here to cut the wheat from the chaff, so to say, to look at how it can gain some tax revenues from those who are the most wealthy in our society, both corporations and individuals, and funnel those back to making life more affordable for Canadians and ensuring that our RSPs, our RESPs, our TFSAs, our pension funds, and whatever capital gains we may make off of great entrepreneurial activities that we undertake continue to receive some tax benefits. And I think that really what this comes down to is asking ourselves, is our system fair right now? Is it fair that people with the most wealth can pay a lesser tax rate on income because it comes from investment as opposed to income that comes from earnings? And that isn't fair. I can tell you, I've gone and talked to Canadians from coast to coast, and every time I ask this question, they say, no, that's patently unfair. We need a more fair tax system, and we need it because that's what we believe in Canada. But we also need it because we need revenue to be able to invest in affordable living, affordable housing, and the kinds of things that actually do make communities that workers and investors want to live in.
Benjamin, to Katrina's point, will this not create a more fair tax system?
No, ultimately, at the end of the day, this measure is meant to try and capture around, $20 billion. But here's the thing: is that when you change policy, outcomes will also be different as well. And capital is highly mobile, and so is labor, right? If COVID has taught us anything, you can literally work from anywhere and build a company from anywhere. So making sure that Canada is competitive, to make sure that we actually have in place the right tools and measures for firms to be successful is critical. And I think that Katrina and I, though, very much agree, though, that we definitely have a revenue problem in this country. I think maybe the way that we look at it is a little bit different, but Canadians are now actually 25% poorer than Americans. We're now 20% poorer than the Australians. We're now 20% poorer than the Danes in Denmark. And the reason why is that we have really low productivity. We have a government that's really been unable to create wealth and prosperity. And if our economy had grown at the same rate as the Americans, we would have an additional $500 billion in our economy. And if you want to tax that at 40% or 50% of what it is from an income perspective, that'd be an additional $250 billion. So rather than us having a really constructive debate about how we grow our economy, how we create wealth and prosperity, how we fund healthcare, how we fund universal housing and education and other tools, what we're left to debate from this government's policy is the dividing up of an ever increasingly small pool of funds. And I think that really is the shame here. And I think, candidly, what the government has intentionally done has tried to create this narrative where this is somehow the fault of the business class, of those that invest, that those that create jobs, and that those are productive in our society in a way that is unfair. And so, I'm cautiously optimistic that we'll be able to work with the government to try and repeal this. But candidly, I think this is a tactic and a communication strategy preparing for the next election.
Okay. Well, we'll let Katrina, you have the last word here on that in response to what Ben had to say. And also, do you think that there could have been another way that the government generate this money? As Ben said, $19 billion in tax revenues over the next 5 years?
Well, I think that this is the right way to generate the money. Is more to the point. We know we need the money, and the right way to generate is by taxing those who have the most to offer up and who have benefited the most off of the economy. And that, in this situation, means those who are the most wealthy. They're the ones who are undertaxed right now and need to be more taxed. And in terms of our competitiveness on capital gains alone, we actually are completely competitive with the U.S. In fact, President Biden just put forward a proposal to tax capital gains at 100% for those making over $1 million every year. So they're taking the same group of people that we are and actually proposing a higher capital gains tax rate. This is not what hits our productivity. This is what allows the government to have revenue in order to invest in affordability and areas of productivity where we want to see the economy grow.
Appreciate both of your time this evening here on Canada Tonight. That is Katrina Miller. She is the Executive Director of Canadians for Tax Fairness. And Benjamin Bergen. He is the President of the Council of Canadian Innovators.